We're 2 hours before the open on Monday, December 13th. Hello, traders. Let's take a look at the market. Let's take a look at our picks. Let's get our bearings. Let's get some points on the board. I want to start the week off with some really nice picks. So, first of all, let's take a look at my picks from Friday. I posted this video before the open. So, all of you should have been able to get in on these trades. You should have been able to watch these stocks. That's how I like to operate. That helps you confirm that this trading system actually works. I'm not showing you mocked up P&Ls, photoshopped stuff, cherry picked. No, I'm showing you the actual trade that is setting up. That's how you're going to get the confidence to learn more about this trading system, hopefully to take the free trial. You can see CVS, that was my bullish pick of the day, downward sloping trend line, breach to the upside, heavy volume, relative strength of the market. Beautiful breakout here. We saw this breakout on Thursday. I was expecting follow through on Friday. Lo and behold, that's exactly what happened. We had a really nice rally on the open. Here's a dip that you could have bought. We had a downward sloping trend line and the stock was starting to move higher. There's your relative strength right in there. You had to wait for that relative strength to start forming during the course of the day on Friday. Now, Friday, we also had a market gap higher. Let's take a quick look at the 5-minute chart, see what the market did on Friday. I've been preaching this time and time again. When you have a gap up like this, a gap up like we're going to have this morning, do not chase. You don't have to chase. Let the market show you what it's got. Let sellers come in and test the bid. Then, once support is formed, you can come in and buy. So here you've got a downward sloping trend line, breached to the upside. You had a bullish 1OP cross right in here. That's also nice. That helps you confirm that you should be on the long side. Let's take a look at when that coincides at about 11:40. You could have even been long in here. So sometime around 11:30, let's say. Well, if you're watching CVS at 11:30, that's right in here. So now you start dropping your downward sloping trend line. Okay, there's my entry point. There goes the stock from approximately 98.10 to 98.90. That's a really nice run. If you're trading options, you're going to do very well with a play like that. I also gave you a short. Now, a short should not perform that well given that the market closed on its high. You would expect a short to move higher. PTON. That was my short of the day. Let's take a look at the daily chart. As I've been mentioning to you, when I'm buying stocks, I like to have them in the upper right-hand corner. When I'm shorting, I want to have them in the lower right-hand corner. I want to make sure that I've got a strong tailwind at my back. You can see PTON finished down on the day, put up the 5-minute chart. And here you can see you would have a decent opportunity on the open Friday to short this stock because the market was filling in some of the gap. So you've got your downward slope right in here, some stacked red candles consecutively. That tells you that there is weakness. 1 OSI below zero. This is a really nice short in the beginning part of the day. Let's put up the SPY overlay so you can see what the market was doing. So you've got this gap reversal right out of the gate on Friday. This heavy selling in here, lower high, double top, this is where you can start considering the short. If you wanted to be more conservative with it, you can wait for this low to be taken out, and you've got a nice profit right in there. As the stock starts to gain relative strength, you've got to be out of the trade. That's how it works. So let's see what we've got today. Going to take off the SPY overlay, simplify the chart a little bit. We're going to go in and take a look at the market. Stacked green candles consecutively. Very, very strong close on Friday. The rest of the day, not really a whole lot going on. You can see how the urge to fill in that gap happened early in the day, but after about 90 minutes of trading, you've got support near a prior day support level and near that prior day's close. So market starts to find its footing. 3 long green candles here. We've erased these 2 long red candles. Once I saw this formation, I was very confident that the low of the day was in and that you should focus on the bullish side. So as far as today is concerned, let's take a look at the daily chart. On a daily chart, we've got this downward sloping trend line that's been breached to the upside. You can see we've got resistance right here. The market is trying to get through the all-time high. We have a fairly stiff headwind for a couple reasons. One is the fact that this is the all-time high. So you're naturally going to have some selling pressure here, and you can see we've tested it a couple of times and not been able to break out through it. The other thing is we've got an FOMC meeting this week. Wednesday, that news is going to come out. The Fed has already said that they're going to have to accelerate tapering. So I believe that any news that might possibly come out of that meeting is going to favor the downside. Surprise will favor the downside. We also might find out when they might possibly start to tighten. I don't think that they're going to tighten anytime soon. The main point is that for Monday, Tuesday, half of Wednesday, I think we're going to see kind of lackluster trading. Very, very important to get context. So here is the context. You need to have the longer term context so that you understand how today's price movement fits into that longer term picture. Resistance, resistance, resistance. We've got a little bit of a gap up. May challenge that high right there, that all-time high from November 22nd. But I believe that on the open, you're going to see some selling pressure as the market tries to find that bid. Are buyers going to be super aggressive here at an all-time high? Well, we do have seasonal strength working in the market's favor, but I think everybody's going to be fairly passive until that FOMC statement. When they get a look at it, they're going to say, oh, hey, tapering might be accelerated, but the Fed is still very, very dovish. And then you could get a release higher Thursday and Friday. Seasonal strength really fueling stocks last week. I wrote in my comments about how share buybacks by corporations have been fueling much of this move. Very, very accelerated stock buybacks. They issue cheap debt. They use the proceeds from those bond offerings to repurchase their shares. Bank of America had stated that in the last week, this is a week ago, that 50% of their overall volume was due to share buybacks. So less shares, same amount of money chasing fewer shares, price goes up. That is a very powerful force that we've seen in the marketplace for a long time. This is not just unfolding now. That is how you get a market that never pulls back because there aren't any good investment alternatives with bond yields coming in below the inflation rate. So you're generating negative real returns in fixed income. That's pushing money into the market. So there's a nice strong market tailwind because we have seasonal strength, we have low interest rates, but we need to be careful Wednesday because of that FOMC statement. So I believe you're going to see a little bit of nervousness. You're going to see some compressed trading ranges. I believe that today the market's going to gap higher. You'll have a pullback. On that pullback, you'll want to be looking for stocks that have relative strength. When the market finds support today, you'll want to be buying these stocks. So let's go in and take a look at which stocks seem to be performing really well right now. I'm going to go into my heavy buying list in Option Stalker. I use Option Stalker. That's a software platform that I've developed with my proprietary indicators and searches. And this is a very easy search for us to run. Important that you have all of these stocks, the best possible candidates, at your fingertips so that when the market does reverse, you're not fumbling around trying to find which stocks would present the best buying opportunities. So we're going to go in and take a look at Costco. We'll zoom out and take a look at that daily chart first. Let me take off the SPY. And you can see how the stock has been able to get above this downward sloping trend line, closed on its high Friday. This is a new closing high for the stock. I think Costco is going to continue to run higher. We've done really well with Costco. Could be my pick of the day. Look at that beautiful strength. Orange line above zero, strong all day on Friday. Oracle, not bad. Gapped up. It was able to hold all of its gains throughout the course of the day. I view that as bullish. It's kind of in the middle of the range. This is not a stock known for big moves. So I believe that you're going to see a little bit of compression here, but the longer that bid holds, the longer the stock is able to hold this breakout, the more likely we are to see another rally in the underlying stock. Microsoft, downward sloping trend line, breach to the upside, stock closing on its high. Love Microsoft. I think that's really nice. CNC, powerful chart. There's your flagpole, downward sloping trend line, breach to the upside, new high. CNC is a really nice looking stock. Could easily be the pick of the day. Here we've got a compression, horizontal compression, breakout through that horizontal compression. The longer and tighter the trading range, the bigger and more sustained the breakout. Forward closing on its high of the day, excellent volume, 1 OSI greater than 0. Ford is going to be my pick of the day if it can maintain this 2060 level, which would be approximately half of this long green candle and the top of that prior range. So any pullback would be an opportunity to buy this stock. So let's set the table. Everybody gets so excited. Oh my God, he's got a pick. He's got a pick. Oh, this thing's going to go to the moon. Take a deep breath. The first thing that we have to watch is the market open. Well, Pete said we're lucky or we're likely to get a pullback on the market early in the day, just like Friday. So if you come in all excited about Ford and you come in here and you buy it and then the market starts to reverse, guess what Ford's going to do? It's going to pull back and you're going to, oh, here we go again. Another losing trade. I just don't know how to do this. You're going to wait for that support to be forming. Wait for that pullback. How far might we pull back? I don't know. We're going to gap about 16 points higher on the S&P 500. Could we test that 471 level? Yes, we possibly could. That might be where the market finds support. Could be a gap that fills in. Maybe we find support just above it. But what you'll want to watch, we have the 10P indicator that we can use that tells us when the market is finding support. But you can also look for a long red candle off of the low and a bullish hammer or a couple of stacked green candles that close above the open of that red candle. When you see something like that, then you know the low is pretty close to forming. Or if you start seeing what I call marginal new lows, so you got a new low of the day, pretty considerable new low, and then you have another new low. This one not quite as dramatic as this one. So when you start compressing, or you see tiny bodied candles, then you can be pretty confident that the market is starting to find some support, at least enough to get a bounce. Well, that bounce in the right stock, like Ford, is going to give you some cushion. So when the stock starts to move higher with the market bounce, you've got some cushion in the trade. You can put your stop just above your entry price. That way you can't lose money. And try and ride forward as long as you can, knowing that you've got a decent market tailwind and that you bought a market dip. You did not chase. So let's go in. Let's take a look at Ford. Let's take a look at the 5-minute price action. Up, up, up. This is what we trade. You can see how relative strength, orange line above zero, the entire morning. When the market was pulling back, what was the stock doing? Compressing. Downward sloping trend line. There's your entry point, 1 OSI positive. See ya later. I like Ford. Put up that SPY overlay. So if you had been trading the breakout on Friday on Ford and you're watching the market come in like this, if you're in here and you're rushing into this stock, you're going to see that there's some selling pressure that you're going to have to weather. Well, the fact that the stock is able to hold its own right in here and compress tells you that as soon as the market finds its footing, the stock is going to move higher. Take another look at CVS. That one went higher right out of the gate. And there was a nice entry point there once the market had found support, downward sloping trend line, orange line above zero. We've already looked at that. KO, decent move, nice strength in here. Doesn't tend to make big moves, choppy, 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 choppy. So I'm not interested in that so much. ABBV, you know this stock. This is my pick of the day, I believe Wednesday or Thursday, whatever the other day that I recorded last week was. Beautiful follow through rally. So how would you know when to get into ABBV? Somebody asked me that question, and maybe this is the stock I highlighted Friday. Quite honestly, I can't recall, but let's say that ABBV was my pick for Friday. You get this market pullback in, excuse me, a pullback in the stock right in here, challenges the high of the day. What's the market doing? Market had been selling off. So you did have the relative strength in here to get long this stock. But if you're in here and you start seeing this orange line below zero, uh-oh, you can still stop out of the trade right up in here, lose hardly anything on the trade because the market's starting to recover here. And now as you start watching the stock, you see that the orange line is staying below zero with greater frequency. There's no reason to enter this trade. It's just not doing anything. When you get market liftoff like this and you're in a stock that's not participating, you need to get out. This would be a classic example. Let's say you're long even in here, in here, in here. If I'm long this stock in here, I'm thinking, hey, ABBV has had great relative strength early today. This stock is going to go as soon as the market gets a bid to it, and there is your market rally. What'd the stock do? Ticks higher a little bit. Nothing. Can't even challenge the high of the day. You need to be getting out right here because you're premise for being in the trade is that this stock has relative strength, and when the market finds a bid, it's going to lead that market rally. In here, it's not happening. Get out of the trade. Look for something better. Look for something that's really moving, like COST. Let's take a look at that chart. There's your market rally right in here. There goes the stock. Beautiful. Just like it's supposed to. Microsoft, very, very strong also. There's your market rally. Oh, yeah. Microsoft leading the charge. So these are the types of things that you need to be watching for. I like Ford. I think Ford is going to perform very well. That's the pattern that we were already looking for in here. Market down, it flat, market up, stock takes off. This gives you the cushion. This is why you want to be trading relative strength. If you bought in here, relative strength, and you bought early, and the market gets hammered in here, right about here, I'm feeling really good because the stock has been able to hold up. So I would weather the storm and hang out for that part of the move. If you're looking for stocks using the searches and you run across a stock like this, then you start dropping your downward sloping trend line. When you get your pop-up alert, it'll say, hey, Ford's ready to go. Take a look at the chart, make a decision if you want to enter the trade or not. So let me give you, because I do feel that we're going to see some two-sided price action, let me just use the counterpart, heavy selling. Let's go in and see what we've got working there. Chewy, very weak stock. You can see it didn't do much on Friday, but it did not rally with the market. Big breakdown after earnings. I think Chewy is going to be one that continues to go lower. Piton, that was my pick from Friday. We already know that that's down. AMC, I'm not going to trade those meme stocks. HOOD, I have been shorting, but tiny little candles, so pretty compressed action, but that is a nasty looking chart. LUV, got some heavy selling here, upward sloping trend line, breach to the downside, bearish flag, new low. LUV could be my short of the day. Just going to continue to go through. CMPS, this was my short from last week. Really nice follow through. Turned into a decent swing trade. Citigroup, very weak price action in here. So that also looks like a good longer term short, SOFI. So out of these charts, I like C as a short. I am looking at a downward sloping trend line here. Stock getting pretty close to the lower end of that. Still has some room to go on the downside. LUV, sorry about that. I think LUV, choppy stock as well, could be the short of the day. That is going to be my short of the day. We're going to keep this brief. LUV, that's your short of the day. I would prefer to trade the long side. So I would be preferencing forward versus LUV. Why? Right here. Because the market is moving higher. The market has a tailwind. We are in a 12-year bull market rally. We are in a 2-year bull market rally. You want to favor the long side. That means when I am shorting, I'm trading smaller size than when I'm buying. So your best play today is going to be, hey, there's a gap up. We've seen lots of buying pressure in the last couple of weeks. I'm going to run with that, but there's no need for me to chase because I see resistance. We're at the all-time high. We have a Fed meeting this week. Going to be some nervous jitters. I don't need to rush into any trade today. Be patient, patient, patient. Wait for the market. Find those stocks with relative strength. Buy them, ride them, sell them, try and get to the sidelines, see how the FOMC statement turns out this week. I am still keeping my swing trades to a minimum right now. Just overnights if I see something very, very strong and interesting. Thanks so much for watching. Please leave your comments. Your comments motivate me, and they also let me know which type of content I need to do more of in my videos. Trade well. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.